Good morning. How is everybody doing? Hi, Matthew. Hi, Nicole. How's it going this morning? Y'all up bright and early, or this afternoon for Matthew? Okay, okay. Hmm. Let me know if you're not. Hi. Okay, I was just about to ask. Can you hear me? All right. Just want to make sure. I think the alerts or the reminders are just going out for the live. But let's see. We are going to get started in just a second. It is so awkward without I've gotten used to the intro video, but now yeah. So it's odd not using it at first. It was hard to remember to use it, but now yeah, kind of used to it. But maybe I'll make my own. But anyways, hopefully you guys are having had a great week, and we are. I did actually not a funny story, but this morning I was a little scattered because on Thursday when I finished our session, I just went ahead and did I went ahead and did our PowerPoint for today, and I did a quiz. I created a quiz and everything. And craziest thing, I couldn't find it. So 30 minutes before, actually 25 minutes before the session, I had to redo the entire presentation. So it is definitely not what it was for what I created on uh, Thursday, but we have our presentation nevertheless. Um, but yeah, let's looks like one updated. Telegram is doing some weird things with the updates. But 5 minutes after. So yeah. All right. So yeah. Okay. Okay. Well, we are going to be talking about your personality and what type of trader and who you are as a person. Good morning, Wayne. Who you are as a person and how it plays into your trading and your trading strategy. Everything about what you choose as a trader moving forward, really determines on who you are and what you have going on in your life, and just to know that it may change. Uh, you know, depending on what stage of life you are in. And those things do affect the type of trader or the type of trading you actually do or should do to be successful, because it's kind of like trying to fit a square peg into a round circle or vice versa. You're trying to fit where you don't belong, and it becomes frustrating. You can be like, oh, this doesn't work, and um, but just all kinds of things people try to do. And I think that probably people, good morning, Natalie, people try to do, and they don't even realize that it's just it didn't work for them because they're trying the wrong thing, wrong trading platform, or they're trying to be a scalper when they're actually uh, a long-term trader. And so it's so important to know who you are as a person, period, for success in life, and definitely in success in trading. But yeah, so our first slide, like I said, I didn't have time, unfortunately, to put everything that I had in the first PowerPoint because for whatever reason it didn't save. Um, but I had, like I was telling everyone before, you guys, you knew people that jumped on the call. Uh, I I did the presentation right after the session on Thursday, but it got lost. But thank goodness our quiz did not. Okay, and we're just gonna get to it. All right. All right, so there are different types of traders. We'll just start with the basics, just in case there's somebody new, brand new to trading. So you can understand what types of traders there are. There's actually there's lots of different traders. There's actually one other kind of trader. It's a quantitative. Anyway, I won't get into that one, but I think maybe I might have told you guys that I'm kind of getting one of my basic training courses confused, but we're just going to go with what we have. So there are scalpers. They're like that type of person would need to um they make fast executions. They're not very patient, quick in and out of the market, and you definitely need uh, quick decision making skills to become be a successful uh, scalper, right? Because you can't be over analytical and trying to scalp 1 and 2 minute, two sometimes even seconds. I remember some people doing, but trying to be a scalper might not fit your personality. If you're more of a, I like slower pace. I get stressed out if I'm forced to make a decision quick. You want to know what a scalper does. So then a day trader is someone that, let me just define like what they actually do and kind of like what the typical length of time and what a day trader does. Okay, a day trader is someone that buys and sells, and usually it's probably anywhere from an hour to somewhere within that day. Rarely goes over 1 day trading, right? And then you have this swing traders. They SM, he is definitely a swing trader. I would say Manny is a swing trader. They have the tendency to be a swing trader, sometimes a day trader, but more than, in my opinion, more like a swing trader, a person that days, weeks. And a position trader is someone similar to an investor. They will buy and hold, and they're okay with that for months or years, right? And so, you definitely that's definitely different than in and out of the market, right? All right. And if you guys have any questions, always feel free to drop a, message in the chat. All right. And like I said, please excuse my little, this little pitiful PowerPoint. But like I said, I only had 25 minutes to finish it. So hopefully there are no major mistakes on it as well. But yeah, so like the importance of knowing who you are when you're trading. You have to align, knowing your personality. You want to align your personality, the type of person you are, to to fit more of the style of trading that you're doing. If you're impatient, you thrive on adrenaline, like it says, you're going to be more suited for scalping. You're okay. You're going to be okay with that, because sitting there waiting for something to set up is going to drive you nuts, right? Now, if you prefer more relaxed pace, swing trading, position trading, and even sometimes day trading would be okay for you, right? And so, if you're patient, you see the setup, you enter the market, and you're okay with the ups and downs, and day trading. I mean, more of that gives you, any of those last three gives you more of a little bit more time to set up to get the setup, do your targets and all of that. The charting is no problem for you. Now, trading in a style that doesn't suit you, like I said, it leads to frustration. Now, risk, it affects it by risk tolerance, right? Risk tolerance, trading on your different, the, like we've been talking about, the trade, what is it? And I just want to commend you guys for starting off the year. I know I said this maybe once or twice before, during the series, but just to kind of commend you guys for, wanting to, um, to get off to a right start, to get the risk management. Because like I said, you could have the best strategy in the world, if you don't manage your risk, you won't be successful 100%. If you don't actually manage your trades and things like that, you will not be successful. And to sharpen your skill, whether you're learning about it for the first time or sharpening your skills, or to reset your mindset because you might have picked up some bad habits, from, just as you were learning, or whomever you learn from, um, you know, uh, kudos to you. You guys are definitely on your way to the top 2% of those, high high uh high earners in trading. Okay. All right. So um but yeah, it affects your risk tolerance. Different trading styles have different risk exposure. Like some people are okay with a lot larger losses, or but some people couldn't handle, some of the losses that some of the other traders use. And also it's going to well, let me not jump ahead, but it determines, like, scalpers take more frequent, smaller trades. It might even I've even seen some scalpers, not all of them, but some scalpers have larger risk to their reward than others. Good morning, Melanie. But yeah, larger risk. You have they might have like a 20 to 10, like they're willing to lose double than what they're just to get 10 pips. And I was like, that doesn't really make sense. It doesn't equate. But they're just so the method to their madness, or the method is a little, it's not unorthodox. But if you can figure out how to master that, that's really good. And I know a lot of successful scalpers. Really do. But if you don't, but the scalping is, most people see, like, they want to get in and get out of the market. Most people think they're scalpers when they're not. I mean, this is the most, in my opinion, this is the most common misdiagnosed or realized personalities when it comes to trading. They think they're a scalper, but they're not. They just not. They're more like a day trader or swing trader. Now, swing traders, they will, like we said earlier, hold the positions longer, and they require a larger stop. It actually requires a larger stop loss. So, like, most of them, uh, some of them will, a swing trader or a day trader. Well, let me see. Like a day trader, it won't require as large, depending on the asset. I got to put that caveat in there because depending on your asset and how the pair actually moves, uh, that's going to determine that, that does affect it, which asset. And I don't know if I've made a slide on that one, but just so you know, the asset definitely. Uh, well, I'll talk about that in just a second. But a day trader, it'll be a lot. A larger, a decent lot size, but you're more likely to be able to be like, well, you know, um, 10 to 20 or 20 to 60 pips. You're, in my opinion, you're able to set those targets. If you want small, like a 1 to 3, like you might be able to do like 30 pips to 90 pips to get a 1 to 3 risk to reward. Um, that's I've definitely seen on the majority of the assets, in forex, you're able to, accomplish something under 30 pips, right? Maybe sometimes, certain times, be 40 pips for your risk, but you just make sure that you have at minimum uh 1 to 2. So if you're risking 40 pips, you're going to want to um at least get 80 pips, right? Because, or just want to make sure that it's not a 1 to 1, because nobody wants to, you know, win one lose one kind of situation. Or once, you don't want to risk 40 to get 40, unless it's something's going on, and it's but your initial target shouldn't be a 1 to 1, right? But things do happen, and you do end up, sometimes that is what you get, but that shouldn't be the goal every single time. But it should be at least a 1 to 2, but in plus a 1 to 2 plus, right? um But yeah, so but swing traders, definitely you might looking, and I'm going to show you some examples of that. But swing traders, they need a bigger stop loss because typically they're on the higher time frames. And if you guys were on with us on Thursday, which I did post the video, but SM, he went over some markups, and he actually enters in on the 1 hour chart. The 1 hour chart actually, depending on the pair. Like if you're on GBP JPY, like that one, like you're gonna need some pips for that stop loss. But if you're trying to use a scalping method to um, enter, I mean, a scalping method with the risk, or a day trading, maybe like 30 pips, 10 pips, or something like that, you're probably gonna more than likely hit your stop loss because they wick. Yeah. And so, in position traders, they definitely need some room to breathe. But yes, but not knowing your trading style might lead to taking trades that require risk levels outside of your comfort zone, and that causes you to be stressed out. And because you're gonna be losing more than you should, you're going to be revenge trading, trying to get it back, because what happens is it'll hit your stop loss every single time and it goes in your direction. If you're that person, reassess. And I think I was showing you guys on Thursday how to, when you're doing your back testing, don't just look to see if the strategy works and if it hits your target. Look to see what type of stop loss or steps you do when you're trailing your stop loss. You know what I mean? Or if the stop loss that you've chosen is actually enough to withstand the pullbacks in before it gets to your target. Those are the kinds of things you need to add to. I've never actually heard anybody say that, but you want to put that into your back testing thought process when you're looking at it, to see like, okay, if I get um, if goes beyond the 100% target, and it goes above and break up structure, and does my pullback, does it always do a 100% pullback, right? Or goes below, if you're on a lower time frame, more than likely it's going to be going below it a lot sometimes, right? But I'm going to show it to you practically in just a second. But yeah, you're just going to want to include your stop loss and what you're using as a stop loss, especially if you have a set number on your stop loss. But understanding how that looks is like the target that you set for your stop loss and for your trailing strategy that we talked about last week, and actually, a few days during the series. Okay. All right. Hopefully I didn't, over beat the dead horse on that one. But yeah, so trade management, um, it's gonna how it affects that is it determines your it also determines your how you manage your trades, right? So the day traders, they exit positions before the market closes, and they don't want to get that swap fee. They don't want to do all that. In like a swinger position, you already preset your mind um, on what type of how long you're going to hold that trade. Let's see. Mismanaging timelines, trying to scalp when you're better suited for a swing trade. Yeah, we talked about that. But yeah, the trade management, and we kind of just went over that when we're talking about, I told you about the back testing, looking at, how you're trailing your stop loss. If you need to do the step method, and the step method is like say you set a stop loss at 20 pips, right? And you have a target of 80 pips, right? And so, but the market breathes, so it's like uh, higher high, higher low, higher high, higher low. It just keeps going up a little bit, and then it pulls back a bit, but not a lot. And so, knowing how many steps in order to before you start to trail, for your initial trail, to when you bring it to break even, if every time you're entering a trade and it hits your break even, once you've moved it to stop your your stop loss into break even plus 2 or 3, it if it keeps going, if it pulls back and then it keeps going and shoots to the moon, maybe you need to wait for the structure to do 2 pullbacks before you move it there. But that's something that you're going to have to understand with the asset class that you're trading, as well as the time frame that you're trading, as well as what you have time for with what you have going on in your life. Okay. All right. Let's see. Position sizing. Um, Knowing this helps you to, choose that correctly. Like scalpers are more risk small. That's not always true, but they risk smaller amounts since they trade more frequently. But like I said, I do know some people that do the total opposite. They overcompensate, which I think is a really bad habit. But that's it. That's my opinion. But then the swing traders and the day traders, they risk larger amounts, like we were just saying, or the number of contracts or or your lot size. But knowing having the Manny's lot. His calculator, his compound plan, is a real plus to what you're doing, because you don't have to overthink it, and it gives you all of the information you need. And like I said, if you guys need that, I can drop the link in the chat. I have to find it, but I can definitely drop the link in the chat so you guys can have access to the compound plan. The compound plan is beautiful. It's great. It's one of his best works. But yeah, you don't want to over leverage or put too much in. So but once you've mastered this and you see that consistently you've been hitting a certain your number of pips or your targets or your TPs, um it you're able to, like, with it, I know this is not on the PowerPoint, but like I said, this is a makeshift one, last minute late makeshift one. But sometimes what you can do is you can, like, let's see, let me bring it back to, you can reference, if you're a forex trader, just think about forex. But when I say contracts, I'm just meaning lots, right? like um if I say I want to put one contract on and it's going to give me $5 per tick, if I wanted to double that, once I understand and I've consistently for a month, 2 months, seeing results, hitting my targets, understanding um, my the moving the stop, trailing my stop, scaling out of a position, then I can increase the lot size. And same with lot size or contract size. And so if you were doing 1.0 lot, um, and once you get to a point where you compounding your plan, your your money, and it's growing, your account is growing, and you're consistently winning, minimizing your losses, not moving your stop loss, removing your stop loss, to quote unquote let it breathe, or trying to win every trade. You're uh, and you've mastered that part of risk management or trade management, you can start to increase your lot size to get the same results but a higher uh, profit, right? And so you don't do that until you've mastered it. And if you start losing, either one or two things happen. You really you didn't really assess, like, properly the past, or psychologically, there's a mental block when you see making $10,000 in your real account, or losing $2,000 is overwhelming for you. That might be the case. It might be a mental thing. But for the most part, it's usually the other. But sometimes it definitely is, like, I don't have the capacity to mentally receive, or to risk that dollar amount. So you might have to reassess your position sizing. But I'm just talking about scaling up. Okay. And we'll talk about that in the future. some other stuff. Okay, but yeah, it goes into the mental control. If your trading style does not match your personality, you will likely struggle with your risk management. Like I said, slow reaction time. If you're overly analytical, that's why I'm kind of like, I'm probably more of a day trader, but I try to be a scalper. I'm somewhere like I'm impatient like a scalper, but um more of a day trader because I am super analytical. Anybody that knows me knows that. Like I'm thinking while I'm speaking, while you're speaking. I try not to, but sometimes I'm working on that. I'm a work in progress. Pray for me. But yeah, swing trader who craves action might enter trades impulsively. Like a swing trader that's trying to be a scalper, they're gonna be late to the party. And a scalper that is trying to swing trade is going to enter prematurely all the time. Those are some of the characteristics to know if you are, you haven't assessed who you are correctly. Okay. Super important. But yeah, it's going to lead to some frustration, over trading, taking trading trades without proper stop losses, and this one is a big one, failing to cut losses early. It's kind of like being in a toxic relationship, not knowing when to let go. You won't know. You won't know. You're there for the toxicity, right? No, we're not toxic when it comes to our trading. We don't have a toxic relationship with the money. If you see it hurting you, get out, right? Just get out. Have a certain number. And like I'm going to show you some numbers at the end of this because this is not very long training today, but uh, yeah, we're going to talk about the numbers. Somebody remind me to say that, to show you that the law of the numbers, like the losses to the so you can actually see what that looks like. All right. So time commitment. Ooh, very good. I'm hoping that I have two quizzes for you guys today, but I'm hoping that the other one actually is actually, it has some more things on there, because the one I created, I don't know if I really addressed that component as much. So you can do both of them. They don't take long. But yeah, your time commitment. Trading defines how much time you need to understand how much time you have to dedicate to trading. If you're still doing your 9 to 5, you definitely need to assess this component properly, because you have to maximize your time. You don't want to waste it, and you don't want to uh, yeah, you just want to make sure that you understand what that looks like. Day traders, you're going to need to monitor the markets a little bit more, maybe than a swing trader, because a swing trader usually, or a position trader, they'll look at it periodically, weekly, daily, sometimes not really very often, but sometimes weekly, because they're in it to win it, right? And they already know that they have like a certain stop loss, and they have the appropriate lot size, because if they actually it goes against them, they're okay with that, right? And so if your lifestyle does not warrant enough time for you to be able to trade how you want, you're gonna want to it's gonna lead to missing trades. Also, uh, yeah, it's gonna yeah, you just you have to know how much time you have to allot. If you have only a couple of hours before you go to work, you're gonna want to make sure, and you're gonna trade maybe the London session. You need to know what that looks like, right? How much time you have to actually trade, and then you're going to always want to continue to um, educate yourself, and to um, never always a student. Like one of my first teachers in forex always taught, Adeze Duncan, she used to always talk about always a student, always being teachable, always realizing that you can learn something from anyone. Okay. Or never dull. I mean, the market's always changing, so you need to understand what that looks like. Okay. All right. So, choice of markets and assets. Okay. So it did. I thought it did, but I wasn't sure. It's like I said, I had to redo this really quick. But understanding your choice um, of the asset and the market that you're going to choose. Like scalpers need higher liquidity than like um, um, than like a day trader, right? So scalpers definitely look at futures, options, things like that. No, options aren't listed on here, but scalpers need high liquidity in volatile markets in order to get, because you want the market to move in a shorter period of time. So I do really, really enjoy futures trading because of that, because scalpers, it's a scalper's dream, bro. And once you understand the position sizes, the contracts, and then the different like the ticks and stuff like that. Guys, we those of you that are here, understand this. If since you learned how to trade forex, you're learning. I know this platform, know the educators. Um, you guys are learning how to read charts. You're learning how to different strategies. If you learn this, you can trade literally any asset class, any any platform. The only learning curve are those two, like learning the platform, the software, and learning the rules on how how certain things. It might be just maybe want stocks and crypto. You might have to understand the project or the stock itself or the company itself, a little bit more research, and it might depend on a little bit more of the fundamentals and sentiment. They kind of rely a little bit more on that, but still they always come back to technical analysis, always. So you chose a good middle ground to expand and to to be able to be versatile in the market. So you're not just a one trick pony. Okay, not wrong with that. But just you're always going to be able to easily convert what you learn here to other areas of the market. But yeah, so scalpers, like I said, the scalpers definitely need the more volatility, but the swing traders and the day traders, um, they like smooth predictability. Um, that's more their forte. Okay, not knowing this might if you're incompatible, if you're trying to trade something like EU, but you're a scalper, you're gonna be like frustrated. You be like, oh my god, this is moving like a snail. Or if you trade like something like what is it EG? That one that only move, I forget, because I always tease the guys about it. Because it moves like a snail, a turtle. It's like it might move 10 pips, and it's like a really far, it looks like it should have been like 400 pips, and it's only like 10 or 20 pips. And it could have been like 4 weeks. And so it's just one of, I don't know which one it is, but it's hilarious. But um but they like it, and it's smooth, and whenever it does do whatever it does what it does. And so um that determines like how your risk too, you know what I'm saying? And so but yeah, it's really interesting with the forex pairs. I really love it. Like all of the different pairs have different personalities. U30 or YM, that's the same thing. um that one is volatile, right? And then if you're trading on the forex side of things, if you want something with a little bit more action, you might want to choose uh, an NZD pair, GBP NZD, or um, uh, definitely any of the yen pairs. Always like higher volatility, but a lot of them wick. And knowing the platform that you're trading on, seem like some of the brokers, they kind of take advantage of that, like the wicks and stuff like that. So you just need to understand the personality of the pair that you're trading, and the platform. So like I said, we know that we have crypto, we have crypto trading, we have crypto investing, we have futures, we have options, we have forex, we have stocks, all of those things, and there's others out there. But knowing this, knowing the asset and the market will definitely play into your choice. It should play into your choice. Okay. All right. So this was an odd little um my copy cut and paste method didn't really work well with this one, but the different trading styles, um, it definitely requires a lot of emotional resilience. If you're not a resilient person, trading is going to demolish you. That's why you have to fortify yourself. I say when somebody first starts trading, I'll be like, or learning trading, I say you got to work on yourself. Yourself shows up in the market more than your strategy, more than your and in your risk management and your trade management. Your personality. If you thought you was a patient person, kind, nice, you're gonna you're gonna see if you're a revenge trader, if you're petty, you're petty, you're toxic, you're gonna hold on to stuff too long, you're gonna stay in trades that hurt you instead of cutting the losses quicker. You're gonna you're gonna let's see what else. Patient when you thought you were patient, but you get frustrated waiting for the setup, and you just get in early, and got here too early. If all of your journal markings, this is why it's so important to journal. I don't know if Michelle's on the call, but I got a call yesterday, and they were telling me about how much journaling has helped them. Right, journaling. Use that journal link that I gave you guys for Christmas. Print out some of the pages, or and make it your own. That's why I gave it to you on Canva, the link, so you can create it and do um, and actually make it your own. You can change the fields and what you don't use, or include some things that you would like to have. And so you don't have to print the whole thing, just print the enough for your journal, for your entries. If you're trading and you don't have time to write down your trades, you're probably trading too much. Okay. um, but yeah, like who you are shows up in the market. Scalpers, misaligning your temperament can cause emotional burnout and reckless behavior. Like you can kill it uh, on the demos, right? But if you haven't mastered the strategy, number one, you haven't mastered the fundamentals, the basics of trading, number two, and then you haven't mastered the risk management or in trade management of your strategy, guess what? You're going to do things like not use a stop loss. Do you have the kind of money that warrants like real money in your demo? Like, I'm not talking about your demo. You get 10,000, 100,000 demo accounts. Do you have that kind of money where you don't have to use a stop loss? If the answer is no, you're not you're not doing the right things. And so if you don't put stop losses, it's like bungee jumping with a bungee cord. Trading without a stop loss is trading without a bungee cord. I mean, is I'm sorry, I said that wrong. But trading without a stop loss is like jumping over a bridge without the bungee cord. You're just gonna hit the water or whatever's down there, right? And you're gonna crash and burn possibly. Um, you might get a few wins, but don't try. I mean, you're going to lose. Just understand that losses are a part of trading, and you're going. But like I said, the this series is called "You Are a Money Manager," right? Hi, Marshall. Yes, Marshall was telling me that yesterday. Hopefully, you don't mind me saying that. But yes, the making sure that you don't have create reckless behavior and habits before you enter, and trading, learning how to trade, or learning the platform, not fully understanding the strategy. If you don't know why you won, or usually we assess why we lost. But if you don't know why you won, how are you going to reproduce those results? Question. Think about it. Okay, great. But how are you going to reproduce those results? You have to be able to recreate um, what you did. It's like I'm a cook. I love to cook. I don't know if I am a cook, but I love to cook, right? And I'm a scientist, so reproducibility is important for me. So I like, even if I make up a recipe um, myself, I like to know exacts because I want to know what worked. And if I cook for people, I'm constantly, if it's something I've never cooked for them or never cooked before, I'm constantly asking them about it because I want to critique it to be able to reproduce what worked and what didn't work, right? And so it's just like trading. You have to know how to reproduce the same results. And of course, it's not going to happen 100% of the time, but guess what? You're going to hit the mark more than not. Okay. And that's the whole purpose of what I was saying, you know, about the law of numbers, being okay with those small losses, keeping the loser small. Our motto for 2025 is keeping our losers small and our winners big. We can have those 1 to 25s once we figure this out, okay? Or 1 to 5 or whatever. All right. So the skills you need, um, we've talked about all of these things, and so um, you know, I won't go into that again. But risk, risk and trade management is your trading heavily depends on is impacted on the manage how you manage your risks, your stop levels, your position sizes, and your how long you actually stay in the trade. Right. Not understanding this will definitely lead to inconsistency and emotional trading mistakes. Let me see. I'm gonna pin your That's great, Matthew. Hold on. All right, so great tip from Tycho. Every trade should give you something. You win to get money. You lose, you should get information. So journaling gives you that info. Oh, that man, that will preach. Love that, Matthew. Yes, yes, sir. And so, yes, just like we were saying, 100%. I love that. Trading. Um, but you need to, you remember we talked about the back testing, what you should look for the back testing. Does the strategy work? Um, is it a good win rate for, uh, what you're looking for? And the other thing that um, oh yes, I see where you said great tip from Tycho, but you typed it though. You shared it with us though. But yes, Tycho did that. But yes, Matthew, that's great. Um, but yeah, so what is it? Your trade management, where you're back testing, you should be looking at the strategy. Do you understand the strategy? Number two, do you understand how the stop loss, if you're going to be using the appropriate stop loss and the time frame and the stop loss, you need to correlate those two. Like if you started out at a 1 minute and then you went to like a 15 minute, that's going to require a different stop loss, right? And then three, understanding how to manage that trade while you're looking at those stop losses, and you want to know how many times it hits your target. But just don't just go look to see if it actually won. You can We can do that all day long, but understanding uh, the risk management and the stop loss of your trades, that's super important when you're looking at your back testing and the target zones. Let's see. But then the other thing is like let's see. Summary. Yeah. All right. So but yeah, so the forward testing is going to give you what you need, as far as like when you're actually doing the day trading on a demo, or even if you use a small, if you're still into the prop firms and things like that, that's going to give you more of a, you know uh, an attachment for the money. And so it'll help you to see, like, you're not going to want to blow your account all the time, okay, on or anytime, and especially if it's your real money. And so uh, you want to master these things when you're back testing and they forward testing, which is the demo, or in my opinion, some of the small accounts on the lots on the what do you call it, uh, the platforms, the prop firms. Okay. But yes, let me share my screen. So that will be it. Uh, let me share. I'm going to drop a form into, you can choose to do this one. I think I published it correctly. Drop it in the chat. So this is your quiz. All right. So it's on a Google Doc, but then there's also one I liked on babypips.com. Let's see. Baby Pips is a good um, platform for you guys if you for those of you that like free. So free is good. This is always free. It's always free, but it's you have to read a lot. Let's see. Present. Share screen. Okay, there we go. Now, let me see if I can make that bigger. All right. So this just a really quick little how many questions? We did 8 questions. This is more for people that's already trading. So, but it's going to help you uh, to know if you're a scalper or whatever. And what I'll do is I'll publish a link also for the results of that. Uh, and so just honest, I mean, answer it as honest as you can, or as close to like not being biased to what you actually think. Um, but yeah, so Baby Pips is the other one. Let me see if it, I have to switch present. Stop. I wish I had like it says window sharing and it doesn't really let you share the window. So when I change it, it stayed up there. All right. So this is the Baby Pip one. This takes you all the way from kindergarten all the way to to your masters or your PhD level. And so all you have to do is click on this link, and I think you may have to create an account, but the account is pretty cool. Like I said, they give you, it's a lot of different resources on this website. Period. I really do like Baby Pips, and so yeah. Um, so yeah, so answer these questions. I really do like this quiz even better. So it's like 15 questions, and this one should locate your where you are, and think about some of the things that we said today. I think which is going to help you to make better choices. And like if you know that you only have the evening time to trade in the afternoon after you get off work, for you might want to consider the obviously you're going to consider one or two things. You're going to do the Asian session or the London session before you go to work. So it's after you get off work or before you go to work the next day. And so finding the time where the volatility, so whenever you're doing your back testing, do those time, utilize those time stamps. I think I've given you at least 2 different ones that'll kind of highlight the time, so you don't have to go back and look like where is 9 o'clock at night, 9 to 12. I just want to see that, how the market moves for my pair. That's gonna help you to see if there are a lot of how often you get the opportunity with the asset that you actually like to trade. So sometimes even though you might like a certain pair, maybe this one moves a lot more during this time, or you get more setups during that time of day. So make sure that you keep that in the back of your mind when you're looking at that. And I think if you CM, if you type in CM space, one will come up for that, but that one's a little wonky. Just kind of warning with that one, and you can kind of you can tailor it, for the time times of day that you want. And then the other one is kill zones, but I'm sure there are tons of them out there. Just do a word search for trading view for time. For time stamps or whatever, so you can find a good indicator that will help you with that. Okay, but yeah, do this, do either one of these. Did I? Yep, that's so let me know if you're not able to copy, cut, and paste those right there, or screenshot it and type it in. Okay, but yeah, let me see. Lastly, what I promised, how you keep those losers small. And hopefully you guys got something out of this series. My our new strategy I'm working on, guys, called Smooth. I don't know what else to call it yet, but that's not what I want. Junior, we're gonna do Junior. All right, time base, and that's that one I was telling you about, is so you can customize it to find the times of day. Just like I said, just make sure that you're on the right time zone down here on the ETC. I'm sorry, the right over here, we're under time zones. Make sure that's your current time zone, and make sure whenever you do your you enter it, and whatever you check over here is what's going to show up. And you can lighten the color, darken the color, however you want, but just make sure whenever you're on it, right here lines up with the time of day that you actually typed in. So like 9 o'clock was there, but on here this is saying 10 o'clock, so I would have to adjust it in the settings in order for it to show me what I need to see. Okay. All right, so let's see. So what I'm looking for, if I was on the 5 minute chart and I was like looking at the Dow during a certain number of times, so I see that one, one, two entries, or if I was like, this would be one opportunity that day, two on a reversal, one opportunity this day. And so it helps you to be able to see it at a glance. One opportunity that day on the 5 minute. But if I drop it down to, where do we go for the results? One person asked. Okay. I actually I will give you I'll drop those in. I'll drop a link where I put the I let you guys know about the like when I'm having a live on Telegram, and then I'll put one under GFU Live as well. I'm sorry, GFU. What is it? The app. I'll put it under the MWT app as well, under GFU. Okay, so that way you guys can find it. But give me a little while. I thought I had printed it. It might not have saved or something like that, or created it or whatever. So my apologies for that, because I had to redo some stuff this morning. But yeah, so for SWT, it gives me an entry, at least one entry usually per day, and that's like 250 ticks, right? That I could have stayed in, and on average, it would like if I took this one, is it 200? Oh, so yep, so about 200, 250 ticks I can get on SGT during that time of day, or those hours that I chose, to 300 for that one. But yeah, I can get an estimation of my stop loss, where I need how many ticks I need for my stop loss, how many pips I'm used to getting, and how many entry opportunities I can. Okay, let's see. The first one asks me submit another response. I'll look at that, guys. I apologize. Like I said, I don't know what happened to all the work I did on Thursday, but I will. I'll actually put both of them in case there's something wrong with it. Actual, the document. Okay. But yeah, so it'll show me the stop loss if I'm using the correct stop loss for the time frame. And so if I went down to the 1 minute, those same trades would get same options may give me two opportunities. So like this one gave me one, two, three opportunities where it would have normally given me one, two, one there, one there, still maybe two right there. This one right here is giving one, two. Yeah, I don't think I went back that far. I think this last one was where I stopped. But yeah, so those right there, those are the kinds of things that you want to be able to see whenever you are thinking about your stop losses. And so just lastly for this series, I this is what, let me go to a regular forex pair. Um, SGT trades. Yeah, GBP NZD usually gives some massive pips. Massive. It's enough for you to eat on. Have lunch or two. Okay, so right here, this liquidity block, and boom, look at that. And the trend line break, and you could have entered right here, and boom, right? So if I would have used this last high for my stop loss, and we don't just use the top of the zone or that resistance level. Like right here is where the resistance would have been, right? Or if you're a liquidity block kind of person, you would have used that zone. So this is the 1 minute chart. So just bear with me. But if I would have used this, this is my entry. I wouldn't want to put it smack on this one, because sometimes it comes up, reaches for that, and goes a little bit above, snatches some liquidity from the left, even farther back, right? But anyway, so I would want to use maybe 25 pips. So it's slightly above, giving it, a little bit of room to breathe. So 21 pips for that one to my 1 to 3. So my first target was 1 to 3. That would give me 60 pips. All right. And this is just on the 1 minute chart, guys. But look how it ran. And just utilizing some of what we learned, this would be the first target. And sometimes I like to use 50% of that, because if it's going to continue, it might pull back at least 50% and keep going. So then I've at least secured some there, or whatever. But see how that massive drop off and it didn't pull back to there? These are the kinds of things I'm looking at while I am trading. So, but right here, if I kept my losers small, and even if I got out right here where it started to consolidate, that's 125 pips, right? So that ended up being like a 1 to 5. We're just going to call it a 1 to 5. So if you lost, if just say it hit your stop loss right there, guess what? It's okay. You can literally lose 1, 2, 3, 4, 5. So 5 times 20. So we got let's say 5 times. We're just saying it's a dollar a pip, a pip, right? So 20. If this was $20 to win $126, okay. Well, this is 20. I'm gonna say $21. So $21 times 5 is what? 100. Let's say 20, 20, 40, 60, 80, 100, right? So I can literally lose 5 times, actually 6 times. I don't know if I bring up my calculator, if it'll show, but I'm going to try. Nope, and it doesn't. All right, so just trust me when I say this. If I take 21 times 5, that gives me 105 dollars. And remember, we said $1 per pip. But if it won, if I actually won, but if I took it a step further and I lost 6 times 21 equals 126. Okay, I literally could lose 6 times in a row with I can literally let it hit my stop loss 6 times in a row before I break even. If I won one and then caught another, was able to capture another one just like this, I would literally break even. I would not be negative. Okay. And so if I only lost 5 times, I'm still going to be up 100. Like I would lose $100, so that would be 21 times 5. I would lose $105. But if I won one time, I I've traded 6 times and I lost 5 of those, but I won one of those. I'm still going to be up. Let me see. So that will be 126 subtract 105. That will be, I will still be up $21. So understanding how, hopefully that made sense. So if you actually won 21, if you lost 5 times and you won one time, you can lose 5 times and win, you know, with those same odds. You can just do your numbers like that, what you're risking to reward. If you're consistent, you're still going to be up. Okay. But I won't hold you guys. I actually have to get ready for another class in just a moment. So hopefully this was helpful for you guys. And like I said, I'll update those as soon as I get I'll fix the document in a bit. And but yeah, I just wanted to show you how the law of numbers. If you master this risk management, you're still going to be up. You're still going to be okay. Okay. All right. Okay, so you guys have a great week and a great weekend, all right? And happy trading this week.